Manoj Viswanathan, Managing Director and CEO of Home First, joins us now. Manoj, good morning. Thank you for joining us. Let's first understand the scenario, because there are contradictory signals which we keep on getting, which is that the urban income is strong, but the rural income is not strong. It is no longer looking all that hunky-dory when it comes to low-cost housing. What is your understanding of the scenario?
See, the understanding on the ground is that the affordable housing itself is a kind of a semi-urban or an urban phenomenon where people are, rural people are migrating to cities, looking for livelihood, living for a couple of years, and then, looking to build or buy their first home. So that is really the phenomenon that we are tapping in affordable housing, and there is no let up in that. In fact, with this whole push into manufacturing that India is taking up, there are a lot more jobs being created, a lot more livelihoods being created in the emerging cities, smaller towns as well as in the periphery of larger towns. And all that is giving rise to a lot of demand for affordable housing. On the ground, we are not really seeing, any let up in demand.
What is happening to your cost of borrowing at a time when interest rates, when they were supposed to go lower, looks like because of high inflation, they're unlikely to go lower? Do you think this time around it could be a challenge in terms of managing the liability and the cost of borrowing, especially when bond yields have not come down? Manoj?
I think I lost you for a bit.
Cost of borrowing, how do we see that moving?
Cost of borrowing at the moment, we are, what we are seeing is maybe, you can see a stable period. I mean, it has already gone up over the last year, by probably about 100 to 200 basis points. And at least from the inflation figures and overall stance of RBI, what we are seeing is, a period where it will be stable for maybe a couple of quarters before it will start going down.
Okay, fair enough. Morning, Manoj, and wanted to also discuss the outlook with respect to the latest note that came in from Jefferies talking about borrowing getting less competitive given now that HDFC Limited is no longer borrowing heavily, especially from NHB. What are the trends that you are seeing here? How are you expecting the environment to really evolve?
Yes, we are seeing some early signs of that. There is more, interest from banks to lend to companies which are, in the mid-sized category like ours. Earlier, a lot of those funds would probably get, directed towards larger companies like HDFC. So we are seeing early signs of that. I think that's something that is good for, companies which are well rated like ours, and which are growing at this stage.
My question specifically is your AUM growth. I'm looking at the numbers here. Your AUM growth is growing at about 30%, north of 30%. But now the base has also increased. And base in last 3 years is almost 2.5x. Can you maintain this 30% growth on this large base?
The growth largely comes from, a distribution expansion, that is, entering new geographies, as well as from gain in market share. And these are, two things that will have headroom at least for the next 5 to 7 years. So which is why we don't see, any hesitation in saying that we'll be growing at about 30%. At least for the next 2 years, there is clear visibility of the 30% growth, because it is just a simple back calculation of, how much we are disbursing versus how much the portfolio is eroding. So from that calculation, we are able to, establish that we'll grow at 30%. Post 2 years, we will have to see how the market is doing, how the economy is growing, etc. Because affordable housing growth is something that is very, very strongly correlated to job creation, increase in incomes, increase in urbanization, a lot of macro factors. Post 2 years, we will have to see how those factors are doing. But at least for the next 2 years, we are very comfortable in saying that 30% growth is visible.
Your 30% of your total book is non-salaried customer. Isn't that a risk? And how are you managing that risk?
30% is non-salaried, and so these are, small businesses, SMEs, MSMEs, which are there, and the from a risk perspective, these are all customers who are building or buying their first home. So in that sense, they're all fairly attached to the property. We also saw, or got a glimpse of how this segment will play out during the COVID period, and we saw that almost all customers were very attached to the property, and they would go to any extent to make sure the installments were paid. So they would prioritize the installments over everything else. So this phenomenon is something that we saw in COVID. So we are very comfortable with the self-employed sector.
But my point is, it's not easy to sell collateral. It's not easy to perhaps, and God forbid, if you have to really re-put that collateral back in the market, a 10 lakh rupee house, a 20 lakh rupee house, it may just end up becoming like a large process. So while you can secure your loan, recovery becomes a challenge. How are you managing that risk?
Recovery has the process of recovery has been fairly streamlined, with the SARFAESI Act. And today, customers also understand. First of all, the customer segment that we are dealing with has, this segment has become very mature as far as credit behavior is concerned over the last few years. So mostly customers, if they have the capacity to pay, they don't default at all. The default happens because of some extreme circumstances, like customers either losing their job for a long period of time, or some serious medical condition coming to some family member. So things like that. And at that point, the customer realizes that it is better for him or her to dispose of the home and take back whatever the down payment that they have made. So which can help them to tide over their difficult condition. So that realization comes to the customer. So recovery has never been a problem for us. So it finally comes down to how you can sell the property, and that is something that our company has kind of mastered over a period of time. So how do we sell these kind of properties in the market? How do you approach brokers? How do you do direct marketing on the ground to sell these properties? So that is something that we have understood, and we are able to do very well. So recovery has never been a challenge.
Sure, Manoj, and just before we let you go, I wanted to get a sense from you. In your shareholding, there are a lot of marquee PE investors as well, and this seems to be the season of exits for a lot of them. Is there any conversation that you have had, anything which could be coming to the markets that you can discuss with us?
No, nothing this quarter, and we have a very clear understanding with the PE firms who are our shareholders that there will be a very structured and systematic exit over the next few years.
Okay, Manoj, on that note, we'll let you go. Appreciate you joining us on ET Now Today Time.